people are anxious about their insurance situation. And I think that's always funny because insurance is supposed to reduce your anxiety. It's not supposed to make you more anxious. And so that's one sort of feature or service that we work with clients on.
Welcome to the most recent episode of We Fix Real Estate. We've got a really special guest on the show today. We got Michael Chien from Rhino talking about insurance, and especially for those that are maybe having Fair Plan as the only option. He's got some alternatives. Welcome to the show, Michael.
Thanks for having me, guys.
Yeah, thanks. We really appreciate you coming on because we get this question a lot. A lot of our buyers either buy this way or that way in the Silicon Valley into the trees. And that's where the Fair Plan kind of kicks in, depending where you are. It could be Danville, could be Oakland Hills, could be Los Altos. They're all over, but it's a question that always comes up. So we know you can do Fair Plan, but tell us and tell our audience what you can do besides Fair Plan and what the whole thing is. So fire away.
Yeah, it's a great question. And I find that Fair has moved beyond the usual suspects of maybe, Tahoe, Truckee, or other, very, very forested, more rural areas into the mainstream, right? Mm-hmm. And so it's gone from something like 100 or 200,000 homeowners and policies to over 500,000 by the recent count. And it means that there are a lot more folks asking about it. And I think what's interesting to me that I find homeowners not always familiar with is how the insurance market is like a little bit of a funnel, right? There are admitted carriers who are regulated by the state. Their rate filings take a long time, but it's for consumer protection reasons. And it means that, State Farm, Farmers, Travelers, the name brand insurance companies are all in that admitted bucket. There is another layer of companies called non-admitted or surplus lines that historically have been used for more niche or specialty risks, but are more flexible with the risk that they can write and the rates that they can charge. And so in a property insurance market like the one we have today, that non-admitted or surplus layer is going from niche and specialty to more and more common as people try and stay off the Fair Plan. And the last layer of that funnel is Fair, which, even the Fair Plan Association themselves say it should be your last resort. Mm-hmm. And so in theory, homeowners are supposed to work their way down that funnel, right? From admitted to non-admitted to Fair. Mm-hmm. And we find that for lots of reasons, but, speed or education, a lot of people will go straight to Fair because they hear about it and because it's a sure thing. Fair will write no matter what your level of fire risk is. And so we are trying to emerge as a brokerage alternative that helps you conduct the most complete search of the market to make sure that if you do have to go on Fair, it really is your last resort. And so we'll write that too, but only after doing a good search.
It's interesting. On the supplemental, is that, or surplus lines, is that similar to like if I have a $1 million wine cellar and I need to get a surplus insurance on that?
Yeah. So surplus lines is just the term for carriers that need to write risk that the admitted markets won't take on. Mm-hmm. And so that might be a house that is outside the coverage limits of the Fair Plan, or it might be a commercial policy where the risk is really complex or niche. And so property has not historically been that niche because most property is 4 walls and a roof. Mm-hmm. But the challenge of having to understand that property's risk against wildfire has forced a lot more properties to find placement in the surplus lines market as opposed to the admitted market.
Okay, I want to ask you another question, just for simplicity's sake. Can you compare going Fair Plan to a vanilla, 5 years ago, State Farm policy, and what doesn't Fair Plan cover? And if those items are coverable, who are they coverable with? See where I'm going with this? I mean, I'm trying to explain it in the simplest terms for people.
Yeah.
Because I don't get it.
It's a great question. And you're right that FAIR is not in and of itself a perfect replacement for a homeowner's policy. It covers certain perils, most notably fire, but also others like internal explosion or you can get earthquake. But it's not every peril that you would want in your homeowner's policy. And so everybody that is on a FAIR plan policy also has to get what's called difference in conditions or a wraparound policy. And so that is designed to sort of round out or fill out the coverage to make sure that the more standard set of perils that a homeowner's policy form covers are all there. So that to make sure that, with your two policies, the FAIR plan and the wraparound, that those are equivalent to a normal homeowner's policy.
So liability insurance, for example, you definitely have to get a separate policy for that. FAIR plan doesn't cover liability, right?
No, FAIR plan will cover your property and liability for certain perils, though.
But not in like a trip and fall kind of situation.
No, yeah, that is part of your difference in conditions.
Got it. Okay. That helps a lot. FAIR plan, from what I hear lately, is not very stable. I haven't seen financials or anything, but we keep giving them business and there hasn't been any fires yet. So
it continues to grow. And with every, large wildfire, their financial position continues to slip. And so, one of the larger headlines that came out of the LA fires in January was that they had to levy a very large fee from all the admitted carriers in the state. Part of how they financially structure the FAIR plan is such that it's allowed to levy fees to stay solvent or in a good financial position. And so as the, losses from wildfire that they're obligated to cover add up, it means that they have to levy more and more of those fees on admitted carriers. And that's one reason the admitted carriers are, not very happy to stay in the state.
Yeah.
It's because it gets pricier and pricier to do business in the state.
Yeah. I mean, we all know about that. I mean, it's like for people who, quote unquote, normal people, it's like it saved up for that down payment. And now the rates went up and maybe they're down a little bit. It's really close. And then you find out, and I got to buy insurance and it's in the wrong place. And you got to pay $18,000 a year. And I don't have that money. I saved up, and now nothing. So it's crazy. I don't have the solution. You don't have the solution, but hopefully the market will make a solution.
You say
it will get better.
You say that, so there's a scale, there's a funnel that you got to go down. You got normal, lack of a better word, you got the admitted insurance, normal insurance. And then most people just race right down to the bottom of the funnel and FAIR plan. Given like a hypothetical cost structure, you now are not able to get admitted insurance. There's the intermediary, then there's FAIR plan. For the average consumer, how does that look?
Yeah, so it depends on the home and where it is. But in terms of order of magnitude, let's say a admitted policy is say $3,000 or $4,000. You might expect a non-admitted policy to be, slightly more expensive, which is why it's less preferable, but maybe in the, let's say, $5,000 to $8,000 range. And then a FAIR plan policy might be $5,000 to $8,000, often just for the fire. And then the wraparound is another $2,000 or $3,000 on top. And so the non-admitted option is both, maybe a better financial decision and also has the benefit of not having to juggle two policies worth of paperwork. And so there are both, great quantitative benefits, right, that you can do in the math. But there's also some of the qualitative things, right? Like FAIR has a long history of not having great customer service. It did not allow automatic or electronic renewals until very, very recently. That's one of the bills that's kind of going through the governor's desk right now. So those are also things that don't show up in the premium calculation that are also reasons to avoid it.
So you get your home insurance through FAIR plan and there's not an automatic renewal the next year. You gotta go through the whole thing over again?
No. And so there are a lot of horror stories that we've seen of people who missed the letter in the mail or missed the payment by a day and are really worried about holding on to their insurance or having their, lender put forced place insurance on them for basically being in violation of the agreement of the loan, right?
Mm-hmm.
That's the worst case, but hopefully if the bill goes through the governor's desk, that will be a feature they add. So.
Wow. And I have a question though, just because now I'm a homeowner here in California. As of now, I still have regular USAA insurance, no problem.
Awesome.
For someone like me, do you get like one chance to fail and then you're on fair plan? Like if there happens to be a fire down the block from me, suddenly I'm blackballed. How have they grown this from 100,000 people to 500,000?
Well, so fair will say yes, no matter what the level of fire risk is. And so when people get non-renewed by their original carrier, it's where people tend to go. How
do these carriers decide when to just say we're not doing business in this area anymore? Is a fire a trigger or a likely fire a trigger?
So carriers are always reevaluating the data they use to make underwriting decisions. And the frustrating part is that every carrier uses a slightly different set of ingredients and mixes them up in a slightly different way. And so, this goes for any independent brokerage, whether it's us or someone else, but like, that's why it's always good to find someone who's independent because they're not beholden to a certain carrier the way they do things. I will say that most often it's that they've reevaluated either the fire risk of the location you're in or reevaluate the condition of something in the home that they don't like to see. So the one that everyone's been talking about is they ran a drone over my house and found moss on the roof, right? Or found a branch over the roof. Exactly. And so the reason can be property specific or it can be location specific, but all that is to say is happening more and more, which is why fair is, up 500% in the last few years.
Okay, now we're going to bring some lawyers to do air rights for every homeowner. It's going to have a covenant that's going to get recorded, and it's going to disallow anybody flying over their house.
I will say there's some interesting consumer advocacy work that nonprofits like United Policyholders are doing. I can't say I'm intimately familiar with all of the proposals, but there is some good work to make sure that folks are informed about, the data that's either being collected of them or used to justify a non-renewal of them, which does give us some, reason for hope.
Yeah, it's like I always thought about if I got a drone and I knew what I was doing, which I don't. I never trained myself on it, but I can get it. And then go around a neighborhood and just hand out, pieces of paper that say, hey, we're in the neighborhood with our drone. Would you like your roof inspected for free? And kind of partner with a roofer. And, it'd be interesting to see if people would agree to it or not, because then once they know something, they have to disclose it. Some people don't want to know nothing until there's a problem. There's people who just aren't into preventive care and don't want to spend the money and want to spend the money on something else. So it makes for a whole crazy situation. And how do you put that into the algorithm? So how do you know when you're picking a client how they're going to be with the house? So I'm getting really deep in the woods. So I'll let that go.
Well, anyway, that happened to my mother-in-law. She ended up having to get a new roof because the insurance company sent a picture of these cinder blocks that the previous roof were left on the roof. She had no idea.
It is worth asking because a lot of times people will get the non-renewal. It's always worth asking if that decision is final or if it's conditional, right? And so if, the first pass is always just to say, well, if I took care of it, is that decision really final? And oftentimes like that does work for people depending on, the carrier you run into. But sometimes it's not good enough.
Yeah. So Michael, someone just got the letter, their insurance getting canceled. They're reaching out. Someone like you is right there to help them. What does the process look like?
Yeah, it's a great question. And so the thing that is interesting about non-admitted carriers is because they're more flexible in what they can write on, they ask for a lot more questions.
Mm.
And so that's information that ideally a homeowner or their real estate agent has, but often has to be cobbled together through the enrichment of a bunch of different data sources, whether it's county permit or assessor records or MLS listing data, or actually just, geospatial or satellite data. We have to come up with the answers that allow underwriters to feel confident in that risk and say yes to it. And so, we have distilled that set of information into about as quick and easy of a form as you can get. And so we work with the real estate agent and or the buyer to fill that out. And the goal is then we can give a comprehensive report that says, here are all your options.
Is
We've
that
done
a
the
standard?
search.
Yeah, I'm sorry. Is that a standard form that you could send us?
Yeah, so there's a form on our website. It is, it's an adaptation of an industry standard that is much longer and virtually impossible to fill out as a non-subject matter expert. So we have done our best to make it user-friendly, if you will, and then do all of the processing behind the scenes.
Yeah, that's fabulous, because I always get, like, my buyer, after they go under contract, they'll talk to an insurance guy and they say, oh, they need to know the age of the roof, or when the last renovation of the kitchen was done, or how old's the electrical. I always thought about, there's these home warranty companies, and we found one that's good called Armadillo. It just actually takes and does things. The idea would be, if a homeowner's insurance company took on the same insurance for all these, whatever they cover, making one big comprehensive policy. But in the beginning, the insurance company would get a copy of all the inspection reports on the property and be able to make decisions that way, and be able to offer this giant package of everything in your house in one, as opposed to these home warranty companies being separate. It's kind of silly.
But we think it's pretty unintuitive that if you're a new buyer of a home, you don't get to assume the policy about the home that the last owner had, which is, in some ways there are, I'm sure, lots of new things to qualify, right? But a lot about the intrinsic value and condition of the home is still the same. And so there ought to be, I think, a really legitimate system of record for following those underwriting inputs that allow the insurance shopping process upon buying to be way more streamlined than it is right
easier.
now.
Yeah. It's crazy. Crazy.
We should have done this at the beginning, but give us a little plug on your business, where people can find you.
So Rhino is a specialist independent insurance brokerage. And what we specialize in is helping hard to insure homes exposed to wildfire risk find coverage through carriers that are not the FAIR plan, which, is basically the last resort carrier. So if people have been non-renewed or declined or maybe even priced out, those are the folks that we're really looking to connect with. And our website is withrhino.com. And that's where you can get in touch with us. That's where you can share your information. That's where you can, get our view on your situation.
Actually, and if you're one of our clients, you go to withrhino.com/Arrivva. So
there you go.
Thank you for setting that up. So then Michael knows where it came from. So.
Yes, exactly.
I was looking at your some of the testimonies. Someone in Marinda got the AI powered risk assessment, and then it goes right down to ember resistant vents and non-combustible siding. Do you help them with these repairs, or is this something AI risk assessment showed that they needed to do?
This is our take on the role of an insurance brokerage, actually. And our view is that the line between insurance broker and risk manager is actually going to start to blur. Oh. And we think it's kind of silly that brokers don't work with their insureds between the time of the buying and the time of the renewal, because that's 12 months where you can really work to mitigate risk at the home level and work on the insurability of the property. I think one thing that we hear in the East Bay, where I am, is people are anxious about their insurance situation. And I think that's always funny, because insurance is supposed to reduce your anxiety. It's not supposed to make you more anxious. And so that's one sort of feature or service that we work with clients on, which is, we can help you see how a carrier sees your home and find some, usually pretty within budget, pretty cost effective, easier things to do that mitigate wildfire risk. Also just for your ease of mind, even if, a carrier doesn't, want to give you a big discount for it, it's a good thing to be proactive about.
That's very
It's
good.
been fabulous. Yeah. I've learned a lot and I like learning about this. I can pass it on to buyers because it is crazy out there. It's just going to get worse.
Yeah,
That's just the way it is.
And I still have one more question here. What is this AI risk assessment and what sort of data do you use? Are you just looking at the geolocation on a map and then using other kind of survey data and aggregating it?
No, so the data that we actually care most about in sort of coming up with recommendations is data that you as the homeowner provide about the condition of your home. We think it's really important that that people know we're using that data to help recommend them things, not necessarily to get them in trouble with a carrier. That's often a question we get. But what it allows us to do when we run those images through a vision model is figure out what of the mitigation checklists that, really smart building science professionals have come up with, what's been done and what's not been done. And so based on our understanding of how much those things cost and how much those things improve the risk profile of your home, we can then sort of stack rank the order of operations of things to invest in or spend your weekend project doing. But all of it is designed to benefit the homeowner. It is not designed to, we're not trying to narc on folks. Yeah, we're not trying to be a tattletale. We're trying to help folks feel like they're in control of, of their home's risk level and ultimately their home's insurability, because those two things are related.
But you're also enabling them to be able to we've done all these things to help mitigate the fire risk. Look at what we've done. That should be reflected in this insurance premium.
Yes. And so that's actually the last thing. Like, if there was one thing we hadn't gotten to that I would want to spend time on, actually, those mitigation actions do factor into the premium. So if you're on the FAIR plan, there's a new bill that actually gives a discount for each of those items you get done, which is a huge, it's one of those like every little thing matters, and they've updated the pricing to reflect that, which is a step in the right direction. And eventually the end state of going in that direction might be that some of this work is required. Obviously not right now, but if you start with discounts, who knows in a few years, what might a condition for insurability be?
That brings up another question. So if there's this checklist to get your premium lowered from FAIR plan, I assume then you're able to shop the other guys that are in between, like you talked about, because it's less risk, more insurable, or is kind of stuck with it?
In theory, yes. And that is the direction we want to see the market head in. I will say that most incentives for property level risk mitigation show up at the premium level as a discount, and less so in the core yes or no decision to underwrite that risk. Part of it is because those actions are always optional, and so it's hard to make a yes or no decision based on inputs that are optional to the homeowner. But if we get to a point where, maybe there are great government programs to help people do this work, or it's become a lot more common to have some of these upgrades applied, say like in building codes, we might get to a point where those things are required to say yes or no at all, and move past the point of just giving discounts.
What have we been on here? About half an hour. And it's like we could continue for hours, but we will let you rest. Maybe you'll come back and after a few episodes of whatever and give us some more wisdom. No, I super appreciate this. And I'm sure my clients will, and those listening, watching throughout the world. But you're just licensed in California, correct?
Yes, just California.
Okay. So if you're listening outside of here, tune out. No, tune back in.
We'd like
Ignore
to be
everything he
licensed in
said.
more states soon. And we find that in a lot of industries, I think other states like to look at California, and insurance is regulated state by state. So our
Yep.
license and learnings may
Real
soon
estate.
apply elsewhere. Yes.
So that being said, though, this brings up good points. So someone is listening there in Washington, they're in a fire area in Oregon. How did they go about finding these middle of the funnel type options?
Yeah, I think it's find a really well-respected, high-quality independent brokerage, right? Those are folks who are independent because they are able to write with a bunch of different carriers and look for the one that fits your needs. And so I think, like I said earlier on, like even if it's not us, right? Just because you are dropped by a single carrier does not mean you are, you are ruled out from all the rest of them. You just need a broker who can help you find them.
What would be search words you'd put in for that?
I would just independent insurance broker near me, and
Okay,
see
you're
who
not fire in high risk area or something like that, or
that may work, though our sense is that we are among a small handful of brokerages that actually specialize by peril. Most other brokers are still generalist. And so the idea is just to find someone who knows your location really well and who will be really good to work with.
got it. There you go. Great advice. We appreciate it.
Oh, thank you so much, Michael. This was fantastic.
Thank you both.
We'll have to get that landing page up on Arrivva now that I know it exists.
Sounds good.
Totally.
Talk to you later.